Good morning and welcome to the i3 webinar with Capital Group. We will examine the future of the internet in Asia. I'm Tech 10 with i3, and I'm pleased to have David Cummins join us today. Welcome, David.
Thank you.
So David is an equity investment analyst at Capital Group based in Singapore with a research responsibility for Asian internet companies. And for our Australian audience, I might add that he also covers Australian small and mid-cap companies as a generalist. In fact, by way of an interest, David also has worked as a venture capitalist in China and in Silicon Valley, and also had a hand in a travel-related startup. So we're in for a fascinating discussion this morning. And to today's topic, so the internet has evolved from becoming a standalone industry to being a ubiquitous connective tissue that touches an ever-growing list of industries, advertising, entertainment, payments, financial services, logistics, healthcare, you name it. Despite this evolution, some things will not change. People will continue to demand choice, convenience, speed, and of course, low prices. And it remains to be seen whether we'll see a continuation of the past, whereby winners take most outcomes prevail, and dominant platforms, I'm sure we're familiar with the Googles and Facebooks of the world, become even larger, or whether the future will be different. In fact, as a result of this dominance, issues such as competition regulation, data privacy have become important issues for the government, for companies, and for us consumers. So in the next 40 minutes, we'll delve deeper into these changes with a particular focus on Asia. I think that's where it's interesting, and have a peek into the future and discuss what it means, for investors. Now, in terms of format, this will be an informal fireside chat between myself and David. While I have a bunch of questions, I'll encourage you, the audience, to submit questions via the question box on this platform, and we'll endeavor to answer them in the course of the conversation. This webinar is for educational purposes only and does not constitute financial advice. It is intended for wholesale and institutional investors only. So David, welcome in. To perhaps help set the context, I think most of us would know internet in some shape or form, but if you can help us, setting the context, the past, let's get back to the past. What has changed in the internet landscape globally, say, the last 5 to 10 years? And as an investment professional, how do you integrate these changes across the landscape? David?
Sure. I think at the highest level, there's lots of ways that we could articulate the magnitude of change that's gone on in internet globally over the past decade. I could throw a lot of data points and statistics at you, but maybe let me hone in on one. If I sort of think about the 10 largest companies as measured by market cap, and I rewind the clock a decade, let's go back to maybe Q4 2011, and I sort of look at that list, what you would find is that there were 4 energy companies, there was 1 bank, there's 1 telecom company, 1 physical retail company, which was Walmart, and 3 technology companies. 2 of them wouldn't surprise you, Microsoft and Apple. The third one might. It was IBM. Amazon was nowhere to be found on that list. And in fact, Amazon crossed the $100 billion market cap for the first time in the summer of 2011. The largest company on that list was Exxon. If I kind of fast forward and think about that same list in Q1 of 2021, the mix of the largest companies in the world as measured by market cap is quite different. 9 of them are technology companies, and the last one's Berkshire Hathaway. The largest is Apple at a $2 trillion market cap, and Amazon is right around $1.6 trillion in market cap. So Amazon itself has gone up 16 times in value off of an already very large base over the past decade. And so I think you alluded to it a little bit in some of your opening comments. If I had to really distill the what has changed question as concisely as possible, it would be that before, I think people really thought of internet and technology as standalone industries. They were very much sandboxed and kind of hived off from many other industries globally. Today, I think it's impossible to disentangle the two. In fact, I would go so far as to say that internet and technology are not standalone industries. Rather, they're necessary elements and enablers of every other industry around the world. And you mentioned a lot of them, whether it be entertainment or financial services or advertising or retail. The internet is a necessary part of all of those industries, and I think that will increasingly continue to be the case going forward. So, again, sort of the key for me is that used to be thought of as a standalone industry, and now it's not. Now it's intertwined with every other industry around the world.
David, again, maybe just to define internet, I mean, there are internet companies or technology companies per se, and there are other companies that use technology as enablers to improve their business or to innovate. No, probably as an investment professional, do you make the difference there, or they're all on the whole spectrum, if you like?
Maybe if I had to crudely bucket companies into two types, I might define one bucket as pure internet companies, and I might define a separate bucket as internet-enabled companies. And let me define kind of what each of those terms means to me, at least. Sure. If I think about kind of what are some of the characteristics of a pure internet company, that they would be as follows. One, strong network effects. Second, they would have asset-light business models and not super intensive from a capital point of view. The next part would be they would exhibit very high margins and returns on capital. So what are examples of pure internet business models? Search advertising is a great example. Online gaming is an example. Marketplace e-commerce is an example. And one of the interesting characteristics of pure internet business models is it does often result in a winner-take-most outcome. So pretty much in whatever pure internet category you want to look at, what you will notice, broadly speaking, is that the winner will take 70% of the market. The number two will take 20%, and everybody else will fight over the scraps. So that's kind of the pure internet business model, as it were. Maybe to contrast that with an internet-enabled business, I think an internet-enabled business, from a characteristic standpoint, is different than a pure internet business model in the following ways. One, they often exhibit weaker network effects, or sometimes no network effects at all. Secondly, they tend to have far heavier asset businesses that require more capital to operate them. The next part is they often have lower margins and returns on capital. And so you might ask, okay, what is an example of an internet-enabled business that maybe I interact with in my everyday life? I think great examples of this might be things like food delivery and ride hailing. And then there's a lot of companies and businesses that might fall in the middle. But, in the past, this is the distinction I was trying to make before, that there was pure internet. Internet was a standalone industry, and it was defined kind of in all of the ways that I just articulated. And sort of as I fast forward to today, there's more of a blurring of the line. Those pure internet models still exist, but many other industries and companies are enabled by the internet, but that are different than pure internet companies in the ways I just described.
Sure. I recall, in fact, and you'll probably be familiar, there's all the discussions at the equities portfolio construction level where this whole growth value discussion, and often when we think growth, it's the FANG stocks and the like. Your point around, the pure play internet companies where they benefit from, network effects and they continue to dominate. Do you see them continuing to dominate in the future?
It's a difficult question. I think you almost have to continue to peel the onion a bit more and be a bit more specific about which geography, which industry.
Right.
I think if I were to maybe overgeneralize, in their core businesses, what you notice and what we observe is that when you establish a leadership position, it becomes very hard to displace the winner. So as an example, Google is kind of an undisputed leader in search globally, maybe less so in a place like Russia or China, but it's very difficult to disrupt Google in its core search business. I think what you would have to see is a paradigm change. And so people would need to find better ways to obtain information than to search. I think when there are those sorts of paradigm shifts, that's when there's an opportunity for an incumbent number one to potentially be displaced by a newcomer. I think another opportunity where we sometimes see this happen is when you see a category creator. The best example is probably Facebook. Yes, there were other social companies before Facebook, but they were really the first ones to kind of nail it at scale. And so what we've seen, we've seen lots of other social-oriented companies pop up globally, whether it be Snap or Pinterest. You could just or Twitter. You could just go on down the list. But Facebook has never been bigger. They've never generated more revenue or more profits. And so I think it just points to the fact that network effects of pure models in particular are a very powerful thing that become very difficult to disrupt. And so I think for an incumbent to be disrupted, you either need to see a paradigm change or you need to see a category creator emerge that becomes more relevant than an incumbent.
Thank you. That's a really good point. And before I get more into the nuances of the Asian landscape, if I could stay on trying to set the context and definition, I have a burning question. And we are often inundated with terms such as Internet of Things and artificial intelligence and blockchain and cloud computing, and you mentioned online gaming. Are these considered next generation of internet and technological innovation? Is that how we should think about these things?
I think all the things you mentioned, whether it be Internet of Things, artificial intelligence, machine learning, blockchain, cloud computing, et cetera, they're all really important trends that we must monitor and pay attention to and continue to learn about. I sometimes feel like there's too much jargon that gets thrown around. If you ask somebody what do any of those terms mean, a definition is often littered with even more jargon, which creates even more confusion. And so sometimes what I try to do in my own mind is I try to simplify these terms and create very easy ways to define kind of what they actually mean. So if I were to take a term like cloud computing, what does that mean? All it really means is on-demand access to computing power, data storage, software, and analytics via the internet. And why is it a big deal? It's a big deal because it enables companies and people to work from anywhere, to work faster, and to work more efficiently at lower cost. I mean, if I were to really boil it down, I mean, that's why cloud computing is a big deal. Similarly with blockchain, what is blockchain? I think there's a lot of people that hear it, that read about it, but that might struggle to define it. And if I were to define it in very simple terms, it's a distributed database. It can be used for lots of different applications. It can be used to track and verify ownership, to increase transparency in things like supply chains, to increase efficiency when it comes to paying royalties in industries such as music. But at the end of the day, it's a database. It's a distributed database. And maybe just the last one, Internet of Things, is one that we've been talking about for a decade. What does that really mean? All it means to me is that more stuff around you is going to be connected to the internet. It used to be your only on-ramp to the internet was your PC in your house or your office, and now everybody's walking around with a computer in their pocket, and that is just going to accelerate, whether it be your phone or your fridge or whatever. There's going to be more stuff that's connected to the internet. And if I may, just kind of one more point I would add on this topic is that when you hear these terms, I think the tendency is to want to look for pure ways to invest in these trends. So people might say, oh, I want an AI company, or I want a cloud company, or an Internet of Things company. When in reality, a lot of the companies that and that we use and are customers of already use these technologies. I mean, Amazon is the biggest cloud company in the world. If you think about something like artificial intelligence and machine learning, every time you search, and Google or whatever search engine you're using is anticipating the rest of your search term, there's artificial intelligence and machine learning that's in the background that's making that better. Every time that you book a ride on Uber, you order food to have delivered to your house, and delivery times and distances are estimated. Kind of the algorithms in that background are very much using AI and machine learning to do that. And the list just goes on and on. If you buy stuff online, and you're being recommended other products, or you're trying to figure out what to watch on Netflix, and they're suggesting things for you to watch, all of these companies are already utilizing these technologies. So I think the tendency is to want to find pure play opportunities to invest in these types of trends. But in reality, if you really think about it, a lot of the big companies around us that we see and use every day have been using these technologies for years.
Sure. Look, we've covered quite a bit on the framework, and thanks for clarifying in terms of definitions and perhaps jargons out there. If you could sort of translate that into our part of the world, in the Asia Pacific region, I understand you cover the major markets, China, Korea, Japan, and Southeast Asia as well. I guess most of us are familiar again with the Googles and the Facebooks of the world. What are interesting companies in our part of the world that you look at, that you pay attention to?
The list is long, and I don't think any of them would surprise anybody. I think when you think about Asia, internet specifically, you've got to think about China, and you could go down the list of the largest, most dynamic companies, whether it's Tencent or Alibaba or Pinduoduo or Meituan or NetEase. There's private companies like ByteDance that will come public at some stage that are all dynamic. They're all very interesting, and they're innovating a lot. I think what is interesting to think about in Asia is a couple of things. One, these companies that we see in Asia, whether they be in China or even in a place like Southeast Asia, if you think about Grab, these companies are a bit different than I'm going to call them their developed market peers in lots of ways. But one of the most poignant ways that they're different is just in the construct of their businesses. As big as Google and Facebook are, at the end of the day, they still make most of their money from advertising. If you were to take any of those companies that I just mentioned, a Tencent or an Alibaba, and really look at how they make money, those companies have 4 and 5 very large revenue streams. They make money from games and e-commerce and online advertising and cloud computing and digital entertainment and digital payments. And so that to me is one of the key differences between a lot of the companies that we're seeing come out of Asia, specifically China and increasingly Southeast Asia, compared to some of their developed market peers. They're much more diverse businesses than their developed market peers. I think the other thing that I think about, we might get to this later in the discussion, is when I think about each of these geographies and countries that you mentioned, I try to think a little bit about the construct of the market, and let me tell you what I mean by that. Let's just take the 3 examples that you mentioned: China, Japan, and Korea. I spent a lot of time thinking about kind of what is the structure of the market, because ultimately what I'm trying to figure out is who are the competitors today and who are the competitors likely to be going forward. And what you notice with those 3 markets that I just mentioned is that the structures of the markets are all quite different. So maybe just taking China first, China historically has been a pretty closed internet market. It's a huge market, but it's been closed. I mean, you haven't seen global internet giants for a very long time be active or really have access to that market. I don't really think that's going to change going forward. And so what that means is that when I analyze or think about a company like an Alibaba or a Tencent or a NetEase or a Pinduoduo, I'm looking at domestic companies as existing competitors and that will likely be future competitors in that market going forward. A second kind of slightly different example would be a country like Japan. Japan is a more open market in the sense that foreign companies are able to, operate in Japan. And so what that means is that domestic Japanese internet companies, like a Z Holdings, it used to be known as Yahoo Japan, must compete with global companies for user attention and say for advertising dollars. So a Z Holdings is going to have to compete with YouTube and Twitter and TikTok and Facebook for people's time and ultimately for advertisers' advertising dollars. Korea is a very interesting example because it is technically an open market, but what you notice is that the domestic players dominate that market. Why is that the case? I think there's a lot of reasons. One, the domestic Korean internet companies are very well run, but maybe more importantly is that Korea is not a massive market the way that India is a massive market, or the way that Southeast Asia, broadly speaking, is a massive market. And so what that means to me is that it's not at the top of global internet companies' priority list per se. So rather than compete in an ultra-intensive kind of smallish market, a company might choose to focus on India or to focus on Latin America or Southeast Asia. And so kind of these couple of things I think are some of the things that I think about when thinking about internet companies across Asia. It's kind of what are the business models, how diverse are they, how are they going to evolve going forward, and then what is the structure of the market, who are the competitors today, and who are they likely to be in the future?
In fact, David, as you were talking about Korea and China to some extent, I couldn't help thinking about, I guess, in some of these Asian countries, there are cultural nuances. Korea, for example, has its own form of culture. I'm just wondering if culture in itself is deemed as a natural barrier, I guess, to the global companies operating in that local economy.
I think there's absolutely some element of that, right? Undoubtedly. The best example was probably in search. The way that I don't speak Korean, but my understanding was that the way kind of the Korean language is structured and the way that Koreans were sort of conditioned to search over time was not really consistent with the way that Google did search in many other markets around the world. And so when they entered the country, there was an expectation on the part of the local population for search to kind of operate one way. It's not really the way that Google operated. And so for that reason, that's one of the many reasons maybe there's always this kind of disconnect between Google and kind of your average domestic Korean consumer. I think culture is a huge deal. I think some of these countries even there's differences in consumers' mentality and buying behaviors within the country itself. A great example might be if you think about China. China is a huge country, and there's people that are in lots of different types of situations that have different preferences and buying habits. You might have a professional in a tier 1 city that is very brand conscious, that is price insensitive, that is focused on service and speed of delivery. And that demand might best be filled by one type of company offering one type of service, say Alibaba, Alibaba's Tmall offering. You might have a whole different set of consumers, let's say folks in tier 4 cities that are less brand conscious, that are more price sensitive, that have a different priority of needs that are sometimes better met by other types of services. Pinduoduo is a great example of this. They've done a really good job of addressing that sort of different consumer need and requirement among that type of consumer. So not only does culture matter across countries, but even within countries, sometimes there's differences in consumer mentalities and behaviors.
You mentioned India in passing earlier, and I'm not sure if you covered India in depth, but India is obviously another big market. It is English speaking by and large as well. How do you see that playing when you talk about the local nuances versus global players entering the market?
It remains to be seen, but my guess is that India is charting its own path. And we're going to create sort of a fourth bucket, right? We have kind of the closed bucket, the open bucket, the open but effectively closed bucket. And I think India is actually going to be sort of a fourth variation, right? Because on the one hand, yes, it is open. So if you look at things like search, Google is dominant in search. If you look at things like online gaming, the global online game companies are dominant there. If you look at things like social networking and messaging, the global giants are dominant there. If you look at a category like e-commerce, the jury's still out, right? Is Amazon going to win that battle? Reliance has become very aggressive recently, and they have lots of kind of domestic know-how, and they understand the consumer very well. So who's going to emerge kind of as the winner there? It sort of remains to be seen. In categories like digital payments, company like Paytm has sort of popped up and appears to be in a pole position there, as opposed to a global digital payment provider, whether it be Ant Financial or PayPal or others, kind of dominating that category. So I think India is going to be a very interesting case study to watch. It's still playing out. There's a lot of nuance that is unique to that market that I think we've got to recognize. It's going to be very interesting to watch it play out.
Yeah, I think in the past, as I'm aware, for example, the big internet companies like Google did not operate in China, and hence some would say that give the local Chinese companies a chance to build up expertise. I guess recently with the tensions, China and India and so on, for example, TikTok being banned in India, one just wonder whether does that give India a chance to then maybe build up the local expertise, local companies benefiting from that sort of trend. Does that make sense?
I think it's a little bit different because the global companies, again, if I were to generalize without getting into specific kind of situations, are able to operate in India. Amazon has been in India for over a decade. Google's been in India for a very long time. Facebook has been in India for a very long time. So that to me is sort of a key difference with China. China was a much more closed market. The markets are similar in that they're both huge markets. But I think by virtue of the fact that China was, effectively closed, it did give the domestic companies time to grow up and to learn and to evolve. But today, many of these companies in China specifically have reached a point where, they're not followers. They're innovators, they're leaders. And in fact, we're seeing global companies actually take pages out of their playbooks and try to learn from them, right? And that is very different than 10 or 20 years ago. 10 or 20 years ago, whether it was a public investor or venture capitalist, often the way that innovation would work is that a model would start or be created in the West, and then it would be taken to a developing market and localized. And so a very popular investment framework used to be the this of that. So, Baidu was the Google of China, and Mercado Libre was the Amazon of Latin America. I think that framework doesn't work as well anymore. And in fact, we might need to turn it inside out and do the inverse of it, because many of the Chinese companies specifically have innovated in so many ways. There's many examples that we could choose, but the ubiquity of digital payments is one of them. I mean, if you think about WeChat Pay and Alipay, I mean, they've effectively replaced cash and credit cards both online and offline. It would be equivalent of combining cash and Visa and MasterCard and PayPal and Apple Pay in the US. I mean, that is how ubiquitous and powerful those payment solutions are in China. PayPal's a big company, but people still walk around with credit cards and cash in markets like the US. And so this idea that innovation starts in the West is a very outdated idea, in my opinion. And increasingly, it's actually starting in places like China and then spreading to the rest of the world.
Yeah, I think that's a really good point, and it's fascinating to see the developments where, for a start, they emulate, and then they've stepped up and gone way and above. And I just wonder, we talk about business model, we talk about competition. I wonder if perhaps the competition lies not so much in other businesses or paradigm shift, as you mentioned, but maybe as in the regulator. I think more recently we've seen in China, probably elsewhere, I guess the likes of Alibaba, where, from a basic e-commerce company going to payments, financial services, whether they've overstepped the boundaries, and I'm just wondering what's happening in sort of the regulation land. I mean, has that regulatory landscape evolved as well? What's happening? And I think more importantly, what's the intent of the regulator given the changes?
Yeah, I think maybe the first part of your question is kind of why is this happening now? And I think part of the answer to that question ties back to some of the points that I made earlier in our discussion, in that the internet is no longer a cottage industry. It's no longer a niche thing that can be hived off from kind of all other aspects of the economy. It's a enabling technology that touches a kind of broadening cross section of the economy, right? And so actually, kind of from any regulator's perspective, it's not a surprise that they would want more oversight over such an important part of the economy than in the past. I mean, some could argue that internet was sort of allowed to grow without much, without as much oversight as maybe other industries. And I think in a lot of places, the regulators are, they're trying to understand these new business models. And they feel like they need to regulate these industries the way that they would regulate any other industry, the way they would regulate a telecom company or a bank or really any other industry. And so from that perspective, it's the kind of why now piece of it is not a massive surprise. What is the intent of the regulator? Again, I think this is kind of probably country specific. And I've never been a regulator, but if I were, there's probably a handful of things that I would be focused on, right? One would be just overall stability, right? Is kind of what's happening, is it conducive to stability or is it causing instability? A second thing I might be focused on is healthy, sustainable economic growth. Is growth out of control? Is growth too pedestrian and not fast enough? Is it something that the country can sustain or not? I would be focused on that. Kind of the third thing I would focus on, and I think this ties into economic growth, into stability, is employment. Do people have jobs? Can they find jobs? Is their life today better than it was yesterday? Do they have a hopeful future that their life tomorrow will be better than it is today? I think that's universal. The fourth piece of it is probably around data privacy. And again, this ties back to the idea that the internet is ubiquitous. I mean, if you think about all of the functions that we perform on our phone, it's a lot more than it was 10 years ago. 10 years ago, we might check a stock price or a sports score or read a news headline or send an email. Now we're banking. Now we're sending medical records. Now we're paying bills. So there's a lot more sensitive data that gets moved around, and so privacy has become increasingly important. And maybe the last thing I would focus on, if I were a regulator, would just be kind of general fairness to both consumers and to merchants. I'd want to make sure that neither consumers nor merchants were being mistreated in any way by some of these companies that have become very large and very powerful.
Mm-hmm. I just wondering, so if yourself as an investment professional, I mean, you evaluate these companies, how do you then evaluate the impact of this regulatory landscape across the investment opportunity set?
Regulation is something that I think you have to think about. It can be very difficult to predict well and precisely, and sometimes what I do is I go back to some comments that you made early on in our discussion, which is, lots of things have changed over the past 20 or 25 years. My working assumption is lots of things are going to continue to change, whether it be on a regulatory front or competitive front or business model front or whatever. And I try to go back to some things that are not going to change. What is not going to change in the future? I think what's not going to change is that people are going to want information. They're going to want to learn and have that information come to them in a relevant, quick way. When they buy stuff, they're going to want lots of choice. They're going to want convenience. They're going to want fast delivery. They're going to want low prices. I don't think that's going to change. No matter what happens with regulation anywhere globally, I don't think that fundamental desire is going to change at all. Other things that won't change, people will have a desire to communicate with their friends and connections and colleagues and loved ones. They'll have a desire to continue to socialize and to build relationships. I don't think that will change. And so sometimes I think instead of getting hung up on kind of how is something that I think in many ways is very difficult to forecast well, how is that going to change? I try to focus on, okay, there's lots of things that are going to change. What is not going to change? And so I try to maybe sometimes just change that vantage point a little bit and focus on things that I think I could be more certain of in 10 or 20 years than something that is very difficult to be certain of a year from now, right?
Mm-hmm. You preempted my next question, but I thought I'll still ask it anyway. Risk is uncertain, and when you think regulation, I guess an associated word is geopolitics. Now, I'm not going to get into a commentary on geopolitics. It's not useful in this context here. But I'm just keen to say, look, with what's happening, call it US, China, or events out there, what does that mean in terms of an investment implication? You talk about investments in country level, whether it's China, Korea, and the like, or India. Do you think about geopolitical risk and what does that mean from an investment perspective?
Yeah, I mean, I think it's a little bit like regulation, right? You have to think about it. You have to learn about it. You have to follow it. I also recognize that I am not a politician. I am not a macroeconomist. I have to also recognize kind of my limitations in terms of area of expertise. Again, like if I think about the last 25 years, if we were to come up with a list of all the geopolitical events that have happened over the last 25 years, it would be a very long list. Some of the stuff would be predictable. Some of the stuff would be things that we never would have predicted. But at the end of the day, Amazon is a lot bigger than it was 20 years ago. And Google is a lot bigger than it was 20 years ago. So it goes back to kind of my original point. Like, we could spend all day trying to think about all the permutations, potential outcomes of geopolitics and whatever. I think you've got to be aware of a lot of those things, and it is relevant to a lot of these companies, but also recognize kind of limitations and ability to forecast well and focus on things that we can actually analyze. I think that, for some of these companies, in Asia particularly, many of them over the past kind of 10 to 20 years have been largely domestic businesses. If you look at kind of where they make money, increasingly, some of them are becoming more international, right? If you look at the rise of TikTok, I mean, it's a global phenomenon. There's an equivalent product in China called Douyin, and the ex-China product is called TikTok. But in any case, it's extremely popular in many places all around the world. If you look at certain games, certain game IP has become popular not just in China but also outside of China. If you look at kind of what's happening in e-commerce, kind of all of it used to be domestic, and now increasingly it's more cross-border. And so I do think that geopolitics, particularly as pertains to some of the companies in Asia, might be more of a focus than it really has been over the last 20 years, because over the last 20 years, many of these businesses have been domestic. And going forward, I suspect that they will still largely be domestic, but they will have more international elements to their kind of makeups over the next, call it, decade.
Yeah, and I think to your earlier point about how some of these Asian companies have been innovating more than the American counterparts, and they could then become the global players in time to come. David, I thought in closing, we've got about 5 minutes. So looking to the future, you've raised a few ideas here and there, but I'd be interested to know, I mean, are there some, what I would say, non-intuitive investment themes that potentially could be more excited, over the next 3 to 5 years?
Okay. Maybe instead of giving you a list of 10 things with no explanation, let me focus on giving you a good explanation of one.
Sure.
One of the things I'm most interested in are new ways to obtain information. I mean, if we think about how that's happened historically vis-a-vis the internet, it's happened with search, and search has gotten faster. Results have gotten more relevant. But with search, you still have to search. You still have to go looking for something. And so I kind of think about, is the way that we obtain information going to be maybe less about searching and more about a product or service anticipating our needs before we need to ask for them and giving them to us? Let me give you a tangible example. This is maybe less relevant over the last kind of 12 to 18 months, but think a bit further back when everybody used to take family vacations. Think about the process involved in organizing a family vacation. You had to figure out, okay, what is a date that works with your job or your significant other's job or other obligations or your kid's school schedule or whatever. You had to identify a date. Then what you had to do is you had to figure out, okay, where should we go? And that probably required a lot of online research and searching, et cetera, et cetera. And then you had to figure out, okay, how are we going to get there? Which is, again, kind of more searching. Kind of what flight are we going to take? What day are we going to go? How much are we going to pay? Should we take this airline or that airline? Then it's, okay, where are we going to stay? 4-star hotel, 2-star hotel. Does it have Wi-Fi? Does it have all these decisions we have to make require searching and research. And then it's, okay, after we get there, what are we going to do? That's even more searching, right? And if I really think about the process of planning a trip, it really hasn't changed that much over the last 10 years. I mean, back in 2011, it was sort of the same process. And so I kind of think about an example like this, 10 or 15 years from now, are we still going to be planning trips like that? Are we still going to be searching and clicking on blue links and spending hours kind of doing all this? Or is there going to be a product or service that somehow anticipates our needs, knows our schedule, understands our preferences, knows what we like and don't like, and magically offers up a solution for us? This is a bit kind of far out there, but it sort of points to this idea that when I think about big future trends, you could think about incremental improvements like search over the past 20 years. It's gradually gotten more relevant and better and faster. And you could also think about order of magnitude paradigm changes. So, instead of searching, make it anticipate my needs such that I don't need to search. I won't go kind of as long on this last example, but he talked about things like shopping and kind of all the different ways to shop. It's very much a search-centric experience today. Your goal is to get in, get out, pay as fast as possible, have it delivered as quickly as possible. I'm still personally inundated by too much choice. This idea that more choice is good, I'm not sure is really what we mean. I think what we might mean is that we want fewer choices, but have them be better options that are more personalized to me. So this idea that, constantly more information and more choice and more options is always good, I'm not sure is true. That's sometimes what we say, but I'm not sure it's always what we mean.
I'm just wondering, do you see this as a kind of a paradigm change that you talked about earlier, or is this a gradual, change, piecemeal? Because when you spoke, I guess this might sound naive. I mean, is this Google plus a large dose of artificial intelligence all sort of meshed into it, and hence it's that, or it's a whole paradigm change that you're thinking about?
I don't know. I mean, I think that's a big question. One might argue that traditional search, the holy grail of search has always been to anticipate needs.
Sure.
Right? I mean, if you think about it, when you type in a search term into a search box, what does it do? It tries to populate with a bunch of phrases that it thinks you're talking about. It's trying to anticipate your needs. Could be Google, or Baidu or Yandex or whatever your favorite or neighbor. Could be something totally different. Sometimes these paradigm shifts happen and the incumbents remain strong. A great example was the shift from sort of PC to mobile. This idea that our only on-ramp to the internet used to be at our house or in our office, and now all of a sudden billions of people are walking around with a computer in their pocket. Many of the incumbents, whether they be social networking related or e-commerce related or search related, were able to make that shift because they were still filling a very important consumer need. So there was a platform shift, but most of those companies kind of made that shift successfully. Now, the next time there's a platform shift, are they going to be able to do that again? I don't know.
Thank you. That's been really fascinating, and that's really all the time we have. Thank you very much, David, for your time and for sharing your thoughts. Certainly, we're looking at the next sort of paradigm change, and hopefully in the not too distant future. To our audience, thank you. We hope this has been meaningful, and we hope to see you at another webinar. Thank you. Stay safe and all the best. Thank you.